you guys have for that second grouping?
Revenue recognition,
Mm-hmm.
expense recognition, full disclosure,
Mm-hmm.
and measurement.
Okay, good. Well, that's what I have matches up. Those are probably the primary ones in these situations. And so, let's see, KC Corporate reports revenue in the income statement when it's earned. And we're going to add a note to that because this is kind of interesting. This is actually the current standard. So revenue is recognized when earned. But there is a new revenue recognition standard that's in process right now. And we're going to discuss that. We actually have a whole chapter on revenue recognition down the road. And you'll have to wait until the summer to get into that. But it's a pretty complicated multi-step thing. And so, and we'll dive into it a little bit, but we don't really know what the final version of that is yet. But they're sort of changing the crux of how you recognize revenue. Right now, revenue recognition, if you looked across GAAP, it's talked about in all these different places. So, like if you're a software, if you construct and sell software, you have a revenue recognition standard. Advertisers, they have a revenue recognition standard. Construction, they have their own revenue recognition standard. And it's multiple times throughout GAAP. So the whole purpose of this revenue recognition standard is to have one standard that applies to most everything. And there's just a couple of exceptions that they're toying with right now. I think insurance is one, and leases. So, but otherwise, they want to have one universal standard. And so it keeps going through a lot of different revisions. So.
Man, I just grasped this concept.
Yeah. Yeah. Well, this one is revenue recognition. I know. Throw you for a loop. Okay, the next one, expenses, that's going to follow revenue. So the period of revenue recognition, we would match the expense to that. That's pretty straightforward. We want to disclose whatever we can to provide enough information to the readers that they get the full picture. And coded reports land. Okay, so that's the last one is a function of measurement. So do we record it at historical cost or fair value? And so GAAP is really a mixed attribute system. So it's got some things at historical cost, some things at fair value. And the movement is a shift more toward fair value. Okay? Because I think we talked about that last time. So IFRS is much more fair value driven. We still hold on to cost because it's more objective, but we're definitely shifting toward fair value. And more what you'll see when we go throughout this book, and you'll notice this if you look for it, is that there's all these options now that you can disclose the fair value, or sometimes it's required that you disclose the fair value. So it's filtering through the notes more, and then I think eventually it'll get onto the balance sheet.